Hi traders, let's just analyze this market and see what's going on here. We've got, from this high up here, the back end of last year, we had a lower low, and at the moment we've got a lower high. So we tested the 50 EMA and all the political noise that's going on at the moment, and we bounced and we closed the gap from the drop in the weekend. So non-farm payroll on Friday, I think we could potentially, if we come out of this, I talked about this last week, I said I want to get high up here. Well, they gapped it down, not giving me an opportunity. What they have given me is an opportunity to get short on this rebound. So I'm going to start to nibble on the short side and see if we can break down through here, through this low, and actually roll over. We are very, very extended, and it's getting harder and harder and harder to find good longs. Now if you look at this chart here, we have from this 2007 high and this 2009 low, we've come a long, long way from 6,500 to 16,500. So 6,500 to 16,500. That's a huge move. And January's big selling bar to me that closed below the 127 extension is telling, and I think the nervousness and the distribution in this market is showing through. Okay, we've had a good February. March is typically bullish, but watch out. I think we need to start preparing for a change in trend. Look at the weekly. There's a topping tail on the weekly. Now, it's not uncommon to ride up into that topping tail before we fail. So if we drop through last week's low, then I think at the very least we're going to test that hammer, and I think we're going to start to wiggle our way out of that and potentially come all the way down to this extension right underneath this level here, which will pull us back to January 2013 highs. And at that stage, I would still short any pullbacks until I get any reversals. So just be very careful, because I think this market is very, very extended. I could go into a long explanation as to why I think this is happening, but just to give you a quick summary, we've got some danger signals in China. We've got Japan is going to have to cut their easing program, which has been very, very extensive and very aggressive. The US is already well underway in stopping their easing program. The easy money has been made. Now it's an opportunity for us to look to get short. Let's just stay on the weekly chart for a minute. Let's look at the pound. Now the pound's been very, very buoyant. But look at this level up here. This is April 2011. We're chopping around up there with high RSI. Bullish week last week, but just be wary, because I'm already short this on this morning's spike. But let's just talk about dailies at the moment. Similar sort of problem to the pound US as we've got in the Dow. We came underneath this last week, came underneath this major fib level support on the daily. We're holding up here. We've got a lot of data this week, so we're going to manage that trading into the data. If I've not got a reserve, then I will come out. Not got a buffer, sorry. This could so roll over as well. We've got the euro. A big decision on the euro this week. We could potentially see a drop in repro rates. Now you can see yesterday's daily closed us below that fib level. All we're doing at the moment is pulling back. I'll get rid of that trend line next time we see. And already, a pop up in the pound yen is seeing us come right into an area of resistance, and we're already down 20 points in the last half an hour. So if we close underneath 169.40 today, then we could be in serious trouble. But let's just get to the, we need to get this week out of the way, but I'm just increasingly looking to the short side of this market. So just be very, very wary. Let's go to the 4-hour chart on this pound yen. And already we're only just pulling back to the 50 EMA, the weekly pivot. So you get a 4-hour reversal bar up there, and that could trigger this to topple. Where's the fibs? Up there, right, okay. And it could come right the way back down to 911. Well, it's 169. Okay, so this is what I'm seeing in the markets. I'm seeing this distribution pattern in a lot of the key markets. Yeah, we pulled up, we dropped, we pull up, we sell, we pull up, we sell, pull up, we sell, and then finally over the weekend they drag it down, and all we're doing, so any retest of this area here, which is 170.65, is to be sold, and that is of course if we get up there, because if we break down here then this is going. So I will be reviewing my stocks and looking for potential opportunities to get short. And look at this, we filled the gap from Friday, putting a topping tail already on the 4-hour chart, and so close below 265 could see us drop. If we get a good non-farm payroll figure and we start to get up here, I would love that. I'd love the opportunity to get short at these levels up here. Here's a Hammerite bar. We come off just tested the 200, popped up. For the moment, the weekly pivot could hold, but let's just see how we come out of the back of the non-farm payroll. Right, I'm just very, very conscious this market is extended, and while everybody is still piling in longs, including myself up till last week, I need to think very carefully. Aussie US, look at this 4-hour, we're getting a 50 and 200 close. So if we can't hold up here, then we could, let me get rid of that. Trend lines sometimes can be very distracting because they take your eye away from patterns. Lots of selling on this one. So we're seeing lower highs, we're seeing lower lows. So this could potentially roll over. They've held rates overnight, but they are still got relatively very high rates. 2.5% on the global market is very, very high. When you consider that a lot of some big economies like the US have got virtually zero. Okay, let's dig down to the 4. Let's just flick through the 4-hour charts, and you can see where I got my fibs on. This is fibs on fibs on last week. Should be, yes, fibs on last week. Just coming into the fib zones and selling. Fibs on last week on this one. On that 1-hour chart, a lot of topping tails last week, and here we are potentially selling at the 61.8% fibs. So the fibs tell you the story. Be very conscious of what the fibs are doing, and look at that massive topping tail on that 1-hour euro. That high appears to be sold into. So a lot of data this week, but I am selling highs and will be managing my trades and switching allegiance to potential short situations. Okay, so there you have it. So if you want to get short, look to see if we can retest 16,300, because if we break this 257 we could come lower on the Dow. If we break this 60-minute bar 688. I think we're going to come down to at least weekly S1. Yen pairs are obviously much more volatile. That's closed the gap. That's not quite, it's just about closed the gap. So at the moment, obviously overnight markets have got pretty buoyant, appetite for risk has come in, but all we are doing is closing gaps. And daily charts are now looking quite frail. Okay, so it's a very, very volatile start to the week. Expect more volatility, but as the week starts to pan out, we can see where they want to take it, and that could have a major impact into the second half of the month, which is triple witching, and the finals report season that will kick in before we get into the summer doldrums. Okay, so I'm planning ahead, looking to see where they might take this market, and starting to get positioned heavily more biased to the short side. There's oil popped up on the politics and very extended, looking as if that could come off with a spinning top yesterday. Alright, so I will give you more detail. I'll do a more detailed video as the week unfolds, and then start to suggest some clearer levels to get in, and particularly some stocks. Okay, but just bear in mind, we've got heightened volatility this week, so be very careful. Alright, thanks for listening, and I will talk to you very soon. The room will be open again 1 o'clock on Wednesday, GMT, which is 8 o'clock Eastern Time. Okay, that's Wednesday. Thanks very much.